Hello everyone, in today's video we're going to talk about why the S&P 500, the overall market as a whole, skyrocketed today. So we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the VIX, and all of the large tech stocks. All right, so without further ado, let's get started with the video. So let's zoom out. Number one, this is a chart of the S&P 500. The reason why we were initially bullish down here at 443 was because the large tech stocks were showing a lot of strength. And it is very, very difficult to be bearish on the market when the large mega cap tech stocks are showing that much strength. So all throughout here, there was a continuation of the large tech stocks showing that strength. So especially today was a continuation of that as well. We saw Google continuing to show strength. Tesla also showed strength. Amazon was continuing to show strength. Microsoft, not as crazy, but it was also starting to show some strength as well. Apple held support and held 175 very well. And of course, Facebook, Meta also showed a lot of strength. So these large tech stocks led the market, led this push upwards, and basically just caused the market to show this much strength. And it's interesting that the large tech stocks created this environment where the market would push upwards regardless of the dollar's strength. So we know that the dollar has an inverse relationship to the market, right? So we know that if the dollar is rising, then that's generally very, very bearish for the overall market. But today was very interesting because the dollar was comfortably green. All throughout the day, it was green. Yes, intraday, we saw some pockets of resistance and, some support, etc. on the dollar. But as a whole, the dollar was green. Regardless of the dollar being green, the overall market also was green. So this primarily is caused by a lot of buyers, and more specifically buyers in the large cap tech stocks. So this was very interesting. And one of the other important reasons why the NASDAQ did so well was, so obviously not the main reason, but something that helped put money into tech stocks was ARM. So ARM stock jumps over 20% in highly anticipated IPO. British chip maker ARM debuted on the public markets on Thursday, opening at 56.10 in afternoon trading. ARM's shares jumped 10% right as trading began and climbed over 20% to above 61 in the first 30 minutes of trading. Going into the IPO, shares were priced at $51 each, and currently, it closed at $63.59. The company opened trading with a $54.5 billion valuation, but the company's market cap already has jumped north of $60 billion. The chip makers go public is the most high-profile IPO that the NASDAQ has seen since 2021's IPO boom, which cycled into a bust in 2022. So this was a very big reason why the tech stocks did so well. It was because a large chip company was newly added into the NASDAQ and IPO'd. And ARM is a unique company, especially among tech companies. As a chip designer, ARM's customers include some of the biggest names in tech, including Apple. It's a one-of-one company, Rainmaker Securities managing director said. However, he added, we have to be very careful. It's obviously a ubiquitous chip design in 99% of our smartphones. It didn't grow last year, but it has huge growth potential in AI. So again, all eyes are on these large chip companies, and ARM is a new addition to it. So it adds some spice to the mix. We don't just have, Nvidia, SMCI, AMD, etc., etc. We've got ARM now as well, a part of the game. So, this should be fun. We're going to be taking a look at ARM as well moving forward, and how ARM, the strength or the weakness in ARM affects the overall market as well. And obviously, it doesn't have as much weight as Nvidia, obviously, but this is definitely important to take into consideration. All right, so now what are the next steps? So we see the dollar, regardless of the dollar, how much strength we have in it, the market kept going higher. What is what we need to watch is also the VIX. So the VIX looks very, very, very bearish at the moment. So we just made new lows on the VIX. The MACD on the VIX is clearly pointed downwards here, and there is more room to fall to the downside on the VIX. And of course, the VIX also has an inverse relationship to the market as well. If the VIX is falling, then that is very good for the market. So given the fact that the VIX looks bearish, we are at a level of support on the VIX. So trying to short the VIX now is similar to what we were looking at before on the dollar. So remember, a few days ago, we were looking at the dollar, how the dollar was at a level of support. And I was saying, you know, obviously you can't go short on the dollar at this level. We could get a bounce. That's what ended up happening. Similar sort of situation on the VIX here. We have support on the VIX. And if the VIX bounces, then that is going to be bearish for the stock market. So, you know, it does look bearish, but it would be nice to see if, you know, things were clean and price action was clean, right? But, you know, we're right at a level of support, but things do look very bearish. But once again, it's tough to be extremely bearish at a level of support, regardless of anything. And so tomorrow could also be turbulent. Tomorrow could also be a bit bullish in the overall market as well, because we have the options expiration, triple witching. So with triple witching, there's usually a bullish move into triple witching. Today was clearly could have been that day as well. It didn't only have to be attributed to the tech stocks rally, but in general, we get some sort of a bullish move into triple witching, and then we could also have a continued bullish move into next week's Fed meeting as well. So that would be pretty interesting. But overall, honestly, if we get a break and close below 447, then this sort of upside potential would be gone. I would be very, very shocked to see if we break below and close below 447, that we would have some sort of strong rebound where we break back above 451. So that 447 level is going to be very, very important. Obviously 447 and this 50% fib here at 446.23, but in general 447 is a really, really important level on the SPY. And overall, this becomes very, very dangerous to start wanting to be long here, because a lot of intelligent large money investors are going to be taking profits on their longs, especially on this big impulsive move to the upside. So everyone that went long at 443, that were buying these dips, they are starting to become profit takers here. And by no means should you start to be bullish this close to levels of resistance. So we're at anything above 450 is starting to get really difficult to be long, in my opinion. It doesn't make the most sense to try to lean long this high, this close to levels of resistance. So, you know, it's going to be pretty interesting how the rest of the market moves. But in general, this is a bear flag, right? So we could continue falling lower, but if we break above 453, if we break above this high from September 1st, what I really think is going to end up happening is we're just going to have to start leaning short, to be honest. But so now this is where the fun begins. One thing, all right, so look, this is where the confusing-ish part begins. All right, so let's first take a look at this on a monthly chart. Okay, so currently, the SPY, we are, this, one second. All right, what I first want to look at is what percentage we are up or down for the month. All right, so let's go ahead and take a look at the open of September 1st, all right? And to today's close, we are basically up, we are basically down 0.6%. All right, so just keep that in mind. So far for the month of September, we are down 0.6% on the market. All right, so this is a chart of the seasonality. So September is one of the frequently most bearish months of the year. We're currently down, and into the middle of the month, the third week of the month, we get a rally or we get some strength, and then we end up selling off towards the end of the month. So overall, September is supposed to be bearish. Now, the interesting thing is that after September, October and November are two of the strongest months of the year. So you could see that on average, we get a 1.3% gain in October and then a 1.8% gain in November. This is consecutively a really, really strong pair of months. And this just gets really, really interesting in terms of playing the market. So, overall, I was saying that as we break above this level, anything above just starts to become a really, really good shorting opportunity. And I'm sticking by that. But what sucks is that we're heading into really, really strong seasonality months. So yes, this by no means on a 1 minute time frame, if we're looking at this on a 1 minute time frame, this is not a bullish setup. Anything above this, we go short on it, and usually always works. And if this going short up here, whatever, well, irrespective of these numbers, I'm just showing an arbitrary break to the upside. So if we break to the upside and we go short and that doesn't work and we go higher up, you still have to go, you still have to lean short, because eventually it really, really breaks to the downside. And because this is just not a bullish setup, this is not a bullish foundation for a move to the upside. So if there is no bullish foundation for a move to the upside, any move to the upside thereafter becomes a bull trap. So that's the fun part. October and November, it's unfortunate. It is very unfortunate that the overall market is not going to just give us just on a silver platter, is not going to give us like amazing setups, but it is what it is. We're going to have to see how this plays out, but overall, to the downside, 447 is a major level of support. If we break below that, then this upside momentum is going to be gone. It would be really, really difficult for people to just bounce it up, honestly. Then if this continues up, then we have this upside target to the lows of October 1st, which is a gap that still needs to be filled here at 455.49. So if that, that is probably going to be a place where people start trying to go short. And if this breaks to the upside, then it becomes if this breaks to the upside, then we have this. If that breaks, then we start trading in the 460s. And it's just really, really, really just difficult to be leaning long the overall market as we get closer and closer to these levels of resistance. But yeah, man, hopefully in the next few days, few weeks, we get a better sort of trajectory of where the market should go. But overall, this is not a bullish setup. This is definitely a place where people are going to be starting to lean short or sell their profits. But another issue is that a lot of retail is starting to become very, very bearish. So when retail tends to become super bearish, that is also really difficult to be bearish as well, because obviously market makers don't want you to be on the right side of the trade. So yeah, man, it's an unfortunate soup of price action at the moment. So yeah, man, yeah, I guess we just have to take this one day at a time at this point, and hopefully in the coming weeks we'll get a better understanding of like some swing trades. But right now it's starting to chop around and just get a bit interesting. All right, so I hope this made sense for you guys. Intraday 451 was a major level of resistance. Intraday tomorrow on the SPY 451.91 is going to be a major level of resistance, and then 452.78. And above that, 454. So the three levels, once again, are going to be 451.91, 452.71, and 454. So those are the main levels of resistance to the upside. And I hope you guys enjoyed today's video. I hope we make money tomorrow as well. And yeah, I will try my best to be on tomorrow morning. And yeah, I love you guys. Take care. Have an amazing rest of your day. And yeah, have a good one. Love you guys. Take care.